The Fed's favorite inflation indicator increased 0.2% in July, as expected. Inflation edged higher in July, according to a measure favored by the Federal Reserve, as the central bank prepares to enact its first interest rate reduction in more than 4 years. The Commerce Department reported Friday that the Personal Consumption Expenditures Price Index rose 0.2% on the month and was up 2.5% from the same period a year ago, exactly in line with the Dow Jones consensus estimates. Excluding volatile food and energy prices, core PCE also increased 0.2% for the month, but was up 2.6% from a year ago. The 12-month figure was slightly softer than the 2.7% estimate. Fed officials tend to focus more on the core reading as a better gauge of long-run trends. Both core and headline inflation on a 12-month basis were the same as in June. Core prices less housing increased just 0.1% on the month. As other inflation components ease, shelter has proven to be stubborn, again rising 0.4% in July, according to Friday's report. Elsewhere in the report, the department's Bureau of Economic Analysis said personal income increased 0.3%, slightly higher than the 0.2% estimate, while consumer spending rose 0.5%, in line with the forecast. Spending continued at a solid clip even though the personal savings rate fell to 2.9%, the lowest since June 2022. From a prices standpoint, inflation changed little over the past month. The BEA said that goods prices fell by less than 0.1%, though services increased 0.2%. On a 12-month basis, goods also were off by less than 0.1%, while services jumped 3.7%. Food prices were up 1.4% and energy accelerated 1.9%. Markets reacted little to the news, with equity futures pointing to a slightly higher open on Wall Street and Treasury yields higher as well. The report comes with the market's pricing in a 100% chance of a rate cut in September, with the only uncertainty being whether the Fed will take the incremental step of lowering benchmark rates by a 0.25 percentage point or being more aggressive and moving a half point lower. In recent days, policymakers such as Chair Jerome Powell have expressed confidence that inflation is progressing back to the Fed's 2% goal. The Fed is expected now to switch from a nearly complete focus on bringing down inflation to at least an equal concentration on supporting the labor market. Though the unemployment rate is still low at 4.3%, it has been trending higher over the past year, and surveys suggest a slowdown in hiring and a perception among workers that jobs are getting tougher to come by.